Hey guys, All in Crypto here, and welcome back, ladies and gentlemen, for another YouTube video. Hopefully you've all had a great start to your days. Today we're going to be diving into our cryptocurrency market update, our daily cryptocurrency market update, and we've got quite a lot to get through. We're going to be talking about the Fed minutes that came out yesterday. This market is still very much no news is good news, and we saw the equity market actually see a bit of an uptick, but crypto didn't follow and has actually opened pretty harshly, or certainly overnight for me as closed pretty harshly. But we're going to be talking about that because we're still in the range. We're also going to be reiterating our bias like we do on every single video. You know, we still think Bitcoin's coming down to your sort of 23, 24K range. We're also going to dive into some issues that ETH2 is currently having with the beacon chain, which essentially is what's going to merge into ETH2. The beacon chain is what they're kind of running concurrent to Ethereum. That's their kind of test, if you will, for ETH2, and it's actually got quite a lot of value locked in it, and they're having some issues, but we'll talk about that. You know, I want ETH2. I just think that it could be an absolute catastrophe in the making, potentially. I mean, they're already having problems now. If they stick to their date of August and it comes out and then we see problems, I think that's going to be very damaging to the smart contract space as a whole, given that Ethereum's really the poster child of it, and also the DeFi space. But we're going to talk about all that. Let's dive in. Let's start by looking at the overall market. Market is down today. You guys know, and I just want to reiterate this quickly like we always do, this is where we believe you're going, down to your sort of 23, 24K range. I think that's a given. Doesn't mean that markets can't see some sort of strength at certain points as the situation changes, or there could be some good news. But ultimately, we've had a lot of good news for the crypto space during this downtrend, and it hasn't really affected the price whatsoever. So this is a confirmed downtrend. Don't bet against that. You guys know that we are shorting this market. Some annoying shorts actually got closed yesterday. I got stopped out just before everything rolled over, but that's just how it goes, guys. You're not going to win every single one. Let's get into the charts and let's take a little look at where we currently are. Now, there's going to be a lot of lines on this because I think this is one of my working off BTC charts. But one thing that is still the case is we are still in this range. Okay, so we're still in this range-bound environment. And we said in yesterday's video, and we've been repeating this, you are going to break this range and it's going to probably follow momentum. Whilst you're in this range, you've got really a 50-50 chance. You may have more than a 50-50 chance given the candle that we've just seen that it goes to the downside. But when you get outside it and start setting up structure, which is either consolidation below it or above it, your probabilities in terms of your trade to the up or the downside are going to become a lot more apparent. Because, you know, the reason I got stopped yesterday, and it was actually on Maker, I got stopped on one trade. We've got a number of trades that we've been trading on Maker, was just here before we actually rolled over. So here, it's very, very common that the market will spike up and close everybody out. On this wick, not this wick, sorry, this wick over here, we actually got stopped out. So we were trading this, waiting for that down break, and on one of my trades, I got stopped out just here as the market goes higher, only for me to then watch it absolutely crush on the open this morning, but it's all good. We've got trades across the board that are doing quite well to the downside. A breakout's coming in. My theory is that when we get a breakout of this range, it's going to be filled with momentum. Now, the dollar was actually quite strong yesterday and has since given up a little bit of that. We'll get off the 5 minutes. It's going to make a lot of sense. The dollar has seen a significant pullback. You'd have thought crypto would have caught a break off the back end of this, and it hasn't. And it's just very supportive of the narrative that we've got, that the environment, the economic environment that we're currently in is not beneficial to not just the crypto market, but the equity market. Equity markets actually saw a bit of an uptick. You know, you have ran interims for and targets for certainly the likes of the NASDAQ and the S&P, so it's kind of natural that you're going to see some sort of resistance and push the other way. And the thing that worries me a little bit with this market is everyone's looking for relief. Everyone's looking for that bounce. If that bounce doesn't come and stop start getting ran and people will be punting on this daily, you know, it just causes further downside. And I think right now the safest play is not to bet against the trend. Yesterday we had the Fed minutes. Fed minutes point to more rate hikes that go further than the market anticipated. There was actually people actually saying the contrary to this, but I think the fact that the Fed very much confirmed what they're doing, upping interest rates and starting to reduce the balance sheet next month, you know, markets go, okay, well, there's no extra little surprise there. That isn't massively negative, but it is totally negative. to be honest with you, as far as I'm concerned. The Fed minutes released Wednesday indicate that officials are preparing to move ahead with multiple 50 basis point, which is 0.5%, interest rate hikes. In addition, the Federal Open Market Committee said policy may have to be past neutral and into restrictive territory. Bad news, because markets are looking at neutral. Restrictive means actually go above that and be more aggressive. The minutes indicate that members are hopeful they can bring down inflation, but also concerned about financial stability risk. So, of course, they're going to be, but the main modus operandi at the moment is essentially to tame inflation. They're doing that by essentially restricting liquidity in markets and taking it away and actually selling on to markets, going from being extremely progressive to being extremely regressive. And that's what you need to pay attention to. The price really is secondary to what is going on in monetary policy. So you can look at monetary policy and really go, okay, well, it's still negative. It's still not great. So that means you're going to come down lower. And we are definitely, I'm very confident in actual fact and certainly positioned accordingly that we get to this lower band at least. And that's with, that could be the best case scenario if we see a bounce off that. Whereas there are certainly lower targets that we'll be looking at. And the thing is, whilst Bitcoin may have been ranging, it's draining your altcoins. And we've spoken about Bitcoin dominance and how that is just going above and beyond. How you're in a structure and, you can see Bitcoin dominance is really upticking. I'll see if I can get my draw on actually that we had for this. Okay, apparently not. Yeah, apparently not. Not sure what's going on there with TradingView. So whilst Bitcoin has been ranging, it's really draining altcoins significantly in actual fact. And that is just, people don't want to be holding this in terms of their spot positions. They're really looking for some sort of confirmation as well before they get long or short. But altcoins are suffering at the hands of this. Phantom's lost a lot of its gains. For somebody that's looking to accumulate altcoins significantly cheaper, it doesn't really bother me too much at all. So the Fed minutes, I think, was overall negative. Let's talk a little bit about ETH2. So we know that Ethereum 2 has essentially been scheduled in for August. And I have huge concerns about it. As a long-term Ethereum holder, I really want ETH2. I think if they can successfully move to proof of stake and become more scalable, that's going to be a huge step for not just Ethereum, but smart contracts in general. ETH is the poster boy for smart contracts. It's the first of its kind. We all, and I have biases in other layer ones. We all owe Ethereum a lot actually, and Vitalik, because it was really those guys and ETH that has got crypto. It's really shaped the crypto history or shaped crypto's future. But I have serious issues because if it comes out in August and we get in these problems, so essentially the Beacon chain experienced 7 block reorg. What's going on? It essentially means that 7 blocks were kicked out of the chain and sort of discarded. You can't run a $222 billion chain with issues. Ethereum's been stunted really because of its gas fees and its unusability as a result of that for most people. And it's also, if they have issues on ETH2, that's going to be extremely detrimental for investors looking to invest, certainly big players in Ethereum, and also, them then sort of rolling off other smart contracts. But it could be good if it goes bad for other layer ones, but ultimately I think it's negative for the space as a whole, as you'll see money pour out of it if there's issues. No big institution is going to put money on a chain that they can't trust. It's that simple. And I actually think that I don't think they're going to stick to the August date. And I'm absolutely fine with that because I'd rather they release something that was, usable and isn't going to do things like just basically kick out 7 blocks, in its progress. I mean, you can see here, these are the missed blocks. That's not good news because people would have had transactions wrapped up in there and that they'd have probably already paid fees to get through. And how can you have a blockchain that can just kick out blocks? So it's an extremely, I wouldn't wish the task on myself because it's a majorly hard task they're trying to do, take something from proof of work to proof of stake. The hard part about it is just how much is built on top of Ethereum, and that all has to configure to the new chain. It's going to be very interesting, but this isn't a good sign that there's problems. And I think ultimately if they launch and it's faulty, and we're getting the signs of that might be the case. It may not be, and I'm very hopeful for Ethereum's success. It's going to be detrimental across the board. So to reiterate, guys, still think we're coming down. We don't have to get there overnight. It can take months. We could just range and not really do a lot until some sort of a catalyst takes place. We'll watch how the stock market opens today. That may provide crypto a bit of relief. The dollar's certainly coming or looking a little bit weaker, but I do suspect that this is going to turn eventually, and we're going to see that the higher dollar. This could be going down on a number of things, potentially the news about the European interest rate hikes coming in September, or it could just be coming down because it's just done so much and is having a little bit of a rest period. So that's really what we got for you guys in this one. It was just a short and sweet update. If you're not already following me on Twitter, head over to @RealAllInCrypto. You'll get more sort of 24-hour updates on here. We may do a video on Luna 2 explaining exactly what's going on. We did do some Luna videos when everything broke, and they were very widely, viewed. So we may look to maybe talk about Luna 2, which is not something I'll be investing in. I feel not so great about the fact that Daquan in many ways has almost got away with this. And for them just to rebrand, given all the pain that they've caused, not just to the Luna holders, but the cryptocurrency market in general, seems a little bit cheated to me. Anyway, all I've got for you in this video, guys. If you've enjoyed this content, like is always appreciated, so is a comment, and I'll catch you all in the next YouTube video. Thanks a lot for watching.